Welcome to the last day of the 43rd NAPE Annual International Conference and Exhibition. And of course, we're ending this last day with two key events. The first one here, the partnership with Energy Institute. And then later this evening, we would celebrate members, exhibitors, and appreciate our sponsors who are never tiring in partnering with us, more so this year, where they have shown great commitment to this noble association. I want to say a big thank you to our sponsors for this particular event, the Pan Ocean New Cross Group. Can you please give them a round of applause? We're a few minutes behind schedule already, so we will start in earnest. We welcome all of our dignitaries, of course, our NAPE president and the entire executive committee, our AC, our BOT. We welcome the MDs, or should I say, the directors of our sponsoring company, and indeed, the distinguished invited guests who've joined us here today. We're also joined by one great ambassador of this country and this continent, and especially this industry, His Excellency Dr. Omar Farouk Ibrahim, the SG of Apple. Good morning to you, sir. Thank you for the work that you do. You know, yesterday somebody was saying, was it the day before yesterday, they don't think the energy bank would work. And we were taking them to the cleaners on your behalf. Don't worry, you've trained some of us well. We will keep speaking until the manifestation of the bank in giving out the funds for those projects. Okay, so let's proceed now to the management session. The agenda you already have is a straightforward one. From my opening here now, we'll go to the president, then Energy Institute, then our sponsor, then His Excellency, the SGF, then the SG Apple, and the panel will take center stage when Rolake would come to drive that conversation. And then our PE will give the vote of thanks. So welcome and thank you for joining us. And to all who came on time, thank you. If time allows us at the end, we'll look for the first person to come here today and we would give them a handshake with some reward. The SGF is coming. I might be giving you serious national honor today. You never can tell. I just appeal to him to give you on my behalf. So you get some good award this morning. But let's progress with the event. Without further ado, I'd like to welcome our president who has delivered alongside the PE yet another successful conference. And I'm sure he's counting the hours now to transfer the insignia of office to the PE. Please welcome Mr. John Bosco Uche, FNAPE, and General Manager Exploration for Renaissance Africa Energy Company.
Thank you very much, Mr. MC. And indeed, in the next 8 hours, I will hand over. So I'm counting in hours. Good morning, ladies and gentlemen, and welcome to the last day of NAPE Annual International Conference and Exhibition, and a session we are proudly, happily delivering together with the Energy Institute that continues their program after today. Distinguished ladies and gentlemen, our past presidents that are here, distinguished fellows, the Advisory Council, also the chair is here already, the BOT members, the Executive Committee of NAPE, the leadership of Energy Institute, our distinguished guests, speakers, and panelists, ladies and gentlemen. Let me first, again, before I welcome you, say a big thank you to Pan Ocean New Cross for what you have continued to do for us in NAPE. The partnership has been strong and continue to grow day after day. So thank you so much, Pan Ocean New Cross. They are paying the bill. So we have to make sure we recognize them very well. On behalf of Nigerian Association of Petroleum Explorationists, NAPE, it is my honor and pleasure to welcome you to this executive session of our 43rd Annual International Conference and Exhibition. In case you don't know, this is the very second edition we're having. We kicked off this partnership in 2024. It was quite a long journey to get us to this point. Then last year, as the president-elect, the IPP here, we worked so hard to get this partnership going. And I'm glad that we are sustaining this. And again, thanks PE for this continuity we're having. And that's what it should be. NAPE is a continuity. And I'm happy with that partnership we've been able to establish with EI. Now, this session is a key session of our conference, which focuses on a critical issue shaping the future of our industry: how to finance Nigerian energy sector in the era of transition, while at the same time ensuring sustainability and inclusive growth. Today, we are privileged to have eminent leaders in the industry, experts with us today, from government, finance, and energy industry, who will help us to unpack the complexities of this evolving landscape and offer actionable insights on charting a sustainable path forward. Just to remind you, there will certainly be a communique out of these sessions, so the discussion today will be part of that communique. As Nigeria navigates the global shift towards cleaner energy and continue to produce oil and gas sustainably, access to finance, sound policies, and innovation will determine how well we can balance our development goals with environmental responsibilities. And for us in NAPE, this is what we continue to push. If by the theme, you can already see that we need to continue to produce oil and gas to solve the energy needs of the world, but in a sustainable manner. Let me once again commend and thank our keynote speakers, our panelists, our sponsors, Nucross Energy, Nucross and Panocean, for being with us today to make this event to happen. Also, a special thank you to our collaborator, Energy Institute, for the partnership we are running for the second time. I encourage all of you here seated this morning to please engage actively, exchange your perspectives, and together shape the strategies that will secure the future of our energy sector for generations to come. Thank you all for being here, and I wish us all a fruitful and impactful session. Thank you very much.
Thank you very much, President and IPP in 9 hours. Mr. John Bosco Uche F. NAPE, welcoming us there on behalf of NAPE, our organizers. Moving from NAPE, this is a partnership, of course, between NAPE and Energy Institute UK. So moving from NAPE, we go over now to Energy Institute, and our next speaker is coming fresh from the UK, where she led conversations to help increase production for Nigeria's oil and gas industry. She's the head of strategic planning at Energy Institute UK, representing the chairman, Mr. Austin Olorinshola. Please welcome Yewande Abiose.
Good morning, everyone. It really is an honor to be here today. It's nice to see everybody bright and early. Okay, 10 a.m. is not that bright, right? It's very bright for me because literally I just got in this morning, and I really wished I'd come in on Monday, Saturday, when our training started. I'm very proud of this partnership, and the real reason why is there are lots of conferences, you'll all agree with me, and it takes a lot for two big organizations to come together to say, you know what, how can we collaborate? How can we partner? You'd also agree with me that in today's world, partnerships go a very long way. So this is me saying a huge thank you to NAPE for agreeing to partner with us, or for both of us agreeing to partner with each other. It really is an honor. Thank you. Again, my name is Yewande Abiose. I head strategic partnerships for the Energy Institute. For those of you that haven't heard of the Energy Institute, where have you been? So the Energy Institute is a professional body, and we're registered by the Royal Charter in the UK. However, we've got branches all over the world. One of the branches you're in now, well, yeah, conversing with right now, is the Africa branch, which is being supported by an amazing woman there called Anu. A round of applause for Anu. And she really did help with creating this committee that helped put this together. So Anu, thank you very much. Focusing on organizations like the Energy Institute, it's about promoting best practice in energy. So not just oil and gas, power, renewables, every form of energy, and ensuring that we put out standards and best practice on how to work effectively. We also promote net zero, but there's also something else we promote called a just transition. And what that means is every region is allowed to determine how their transition should go. And this is something that is at the forefront of the work we do at the Energy Institute. We understand that a region like Africa needs energy to grow. We need energy for jobs and industrialization. And for that reason, we promote energy efficiency. We promote best practice in energy so that it's not just about producing energy, it's about working responsibly. So thank you again, everyone, for being here. Now, why is this session so important? I think you'll all agree with me that all around the world, capital is moving. Some of them, it's really because of ESG or the new definition of what sustainable financing means. Capital is moving. But if we look at Africa, the story is different. In my opinion, it's sort of layered. We find that the question is, are people looking to invest in Africa? Yes, they are. It's more how and under what terms. What terms are you looking to partner with somebody? What terms are you looking to get finance for your projects? So this is a very interesting topic for me, and I'm hoping we all get to enjoy it also. Another huge thank you to somebody. Her name is Rolake. There's a good reason why I'm mentioning Rolake's name, and it's because we are good at stressing Rolake. Thank you for agreeing to chair this session. We appreciate you. My final thank yous go to the committees. The committee that helped set up the group. It's, I think, every other week, and we're sending emails. Please join this meeting. Please join this meeting. Thank you for being a part of that. And then huge greetings from my chair, Mr. Olorunshola. He is very gutted that he can't make it today, and he has asked that I send his greetings to everybody, but he will be here tomorrow. If you're wondering what here tomorrow means, it means a conference called Energy Sustainability Conference, a conference we've been running for the past 6 years at the Energy Institute, and we're really proud of it. What we're trying to push here is the concept of the just energy transition. Final note, and I'll let the panel start. I'd like to formally ask that you join us in London in February. There's our flagship event. Some of you might know it as IP Week. So the Energy Institute is the custodian of IE Week, which is International Energy Week. I'm formally inviting you all to join us. We're going to have a special session just for Africa, also speaking on the theme and topic I mentioned earlier. Ladies and gentlemen, thank you for having us today, and it really is an honor to be here.
You didn't come on time to be a gentleman, Alex. Don't worry. I'm the gentleman. Thank you very much, Yewande. You see, I'm not calling you Yetunde. Oh. I'm not calling you Yetunde. You are Yewande. Thank you very much. Please give her another round of applause. Thank you. You know, one word that you would always hear in this industry when it comes to the success of what is done here, especially now that the government is seeking to increase our production, that word is partnership, is collaboration. And our sponsors today are truly a good example of such collaboration and partnership. And again, we thank them for putting their money where their mouth and interest is. To speak on behalf of our sponsors this morning, I'd like to welcome the Group Executive Director for the Pan Ocean New Cross Group. Please welcome Dr. Bolaji Ogundare. Even though the applause will not replenish the money they brought, but make the applause better, make it better. It's encouraging. Thank you.
Thank you very much. Good morning. I was hoping for a brighter good morning from there. Good morning. Thank you very much. Yes, good morning, distinguished leaders, the presidents and executives of NAPE, representatives of the Energy Institute, captains of industry, colleagues, and esteemed guests. It is an honor to join you at the 43rd Executive Management Session. The partnership between NAPE and the Energy Institute reflects a sharp vision, strengthening the relevance of energy sector and driving its sustainability in a rapidly changing world. The theme for this year's session, Financing the Future of Nigeria's Energy Sector, Navigating Energy Transition and Driving Sustainability Development, goes to the heart of our collective challenge, how to attract and deploy capital which sustains today's production while enabling the cleaner, more innovative energy systems of tomorrow. With the global energy transition in progress, our nation's pathway must be pragmatic and future-focused. We must continue to optimize hydrocarbon resources while investing deliberately in gas infrastructures, renewables, and carbon management technologies, and positioning Nigeria for competitiveness and resilience over the next decades and decades to come. Financing this balance requires more than capital. It demands credibility, competence, collaboration, and commitment. Investors must see an industry that is well-governed, transparent, and united around a clear national direction. At Pan Ocean and New Cross companies, we embody this collaborative approach. Our group operates as one ecosystem. Pan Ocean Oil Corporation, which has been in existence for many years and has been one of the pioneering oil companies in Nigeria. New Cross Petroleum, which is really the partner and collaborator across the industry, where we've collaborated with other leaders like Platform Petroleum, Lake Oil, Ray Flush, All Bright Waves in developing hydrocarbon and resources across Nigeria. New Cross Exploration and Production, the operator building capability and technical excellence. New Cross Energy Limited and our newest venture, New X, both of which are the integrators and innovators leading our presence in the cleaner fuel sector. In 2025, this strategy has yielded tangible results. Through strong technical collaboration and alignment with NNPC Limited on PMLs 56, 55, and 57, New Cross EP has achieved a 33% increase in production just from the Ekulama 12 and the Aoba Northwest 3 wells. At the Ovade Gas Plant and OML 147 and OML 152, we are committed to reducing emissions and optimizing gas monetization, exemplifying how sustainability and operational excellence can go hand in hand. The Ovade Gas Processing Facility has achieved a production capacity of 170 million scf per day, with a design capacity of 200, by the way, while OML 147 has successfully monetized its flare gas through the commission of its vapor recovery unit compressors. These milestones underscore some of our dedication to operational efficiency and highlight our growing contribution to the advancement of Nigerian gas value chain. Through New X Energy, in partnership with others, including Privida Energy, we are investing in solar mini-grids and energy efficiency projects which advance Nigeria's just and inclusive transition. These efforts reflect our belief that indigenous operators must not only participate in the transition, but also lead. Its responsibility, transparency, and the long-term commitment to its national goals. As an industry, we have the opportunity to redefine how energy is financed in Africa, linking innovation with integrity and investments with impact. This is how we build confidence among financiers, regulators, and host communities alike. NAPE provides this space for us with the Energy Institute for a conversation to share lessons, align policies, and share a more sustainable and competitive energy value chain. On behalf of Panocean and New Cross companies, I commend NAPE and the Energy Institute for sustaining this vital platform for dialogue and partnership. We remain very proud sponsors of this year's session and committed allies in the collective effort to strengthen Nigeria's energy future. Thank you very much.
Yes, thank you for remaining committed allies in strengthening our energy future. And I'm sure our PE for next year has taken note of that word and is paying a courtesy visit. But please, let's give Dr. Ogundare a round of applause one more time. And many thanks, many thanks to the Pan Ocean New Cross Group for this sponsorship. Your Excellencies, distinguished ladies and gentlemen, we will now take first of our two keynote addresses. The first one is by a seasoned public servant and renowned leader in our political space, a man who has led at different levels of governance in Nigeria, but most importantly, leveraging on his Benue Advance Plan, contributed his quota to the transformation of the food basket of the nation, Benue State. And I can say that because by association, I'm actually a thief man. Mr. J.S. Taka can tell you that very well. So I can also attest to some of those transformations that he brought to Benue State. Currently, and most importantly to us, he is the Secretary to the Government of the Federation. I speak of His Excellency, the distinguished Senator George Akume, CON. He's not able to join us in person, but he has sent a former UN appointee and his current technical assistant. Please welcome Professor Bolaji Babatunde for the SGF's address.
Ladies and gentlemen, when my principal is a laboratory introduced like this, I feel a lot smaller again to fit into his shoes to represent him. But again, in government, usually as directed. So I'm here to represent distinguished Senator George Akume, who last minute discovered that he could not be here. He takes this organization, the Energy Institute, and this program very seriously. When I received the letter, when he received the letter emanated to me, and usually to do my due diligence, I went to speak with him how we're going to plan his outing here. It shocked me that my principal was speaking a lot of things that I did not see in my own little finding. So he had done his homework on NAPE and this conference over the years, and he discovered that it's such a conference that will bring the requisite impact, especially in the dynamics of our energy transition. So he would have loved to be here, but unfortunately he couldn't make it. And so he asked me to step in for him. I'm sure all of us are very aware of the dynamics of the polity in the country at the moment and in the world as a whole. So he has his hands full with these happenings and, of course, the solutions to it on a regular basis. We respond to emails 3 o'clock in the morning, 4 o'clock in the morning, and so on and so forth, to just be able to stand a better position to not allow negative infiltration to cause some consequences into our country. I want to believe that the protocol which I have seen in here, I came in a bit late, has been well established. So I will just adopt it and go ahead and read this keynote address by the Secretary to the Government of the Federation at the conference of the Nigerian Association of Petroleum Explosionists, NAPE. By the way, a car was mentioned here. I'll be looking out for him. I greet you, my senior brother, Suk Bishi. The theme for this year, financing the future of Nigeria energy sector, as presented there, navigating energy transition and driving sustainable development. I wasn't here in the last few days, but I've heard some of the discourse, especially with respect to energy transition. And I heard the Minister of Petroleum Oil was here. As I speak, it was just yesterday that I got approval from the SGF on a memo he sent to us with respect to this energy transition. So I'm glad to also let the President know that, and of course the chairman of the Energy Institute, as soon as we're sending out letters for stakeholders, because the argument in all the sectors becoming, we don't want to have divergent views when it comes to our own national energy transition. So we must come together. And as soon as those letters are ready, you will also be invited so that we can all have a good discourse and unify our national intent with respect to energy transition and so on and so forth. The president of the Nigerian Association of Petroleum Explorationists, NAPE, the chairman of the Energy Institute of Nigeria, distinguished members of NAPE Executive Council, and all the members, captains of oil and gas industry, distinguished delegates, members of the press, ladies and gentlemen. Please hold me accountable for any mistakes I make here. My principal, like you heard his introduction, he was a permanent secretary, rose through the ranks to permanent secretary, governor 2 times, senator 3 times, minister of the Federal Republic, now secretary to the government of the Federation. He reads and dots his I's and crosses his T's very well. So I am sure his document is near perfect. So please hold me responsible if I make mistakes in my pronunciations. I'm a nuclear scientist, so English is a bit of a trouble. It gives me great pleasure to join this distinguished gathering of Nigeria's finest energy minds, the geoscientists, engineers, financiers, and policymakers shaping the energy destiny of our great nation, Nigeria. NAPE's annual conference remains the intellectual crucible for charting the course of Nigeria's energy future. This year's theme, Financing the Future of Nigeria's Energy Sector, Navigating Energy Transition and Driving Sustainable Development, could not be more timely or consequential. I commend the leadership of NAPE and its entire membership. Kudos also to the Energy Institute of Nigeria for putting this together at a time Nigeria needs it most. I'm positive the last few days must have produced vast information required to advance our energy future in the right direction. The dual mandate before us with respect to energy transition. Nigeria stands at a historic intersection. On one hand, we remain heavily dependent on hydrocarbon resources, the source of over 90% of our foreign exchange and the backbone of fiscal stability. On the other hand, we must confront the imperatives of climate change, energy diversification, and sustainability. Our dear mandate, therefore, it is clear. 1, maximize value from our existing oil and gas endowment to fund our development priorities and finance the transition itself. 2, to ensure sustainability by building a diversified, resilient, and inclusive energy future that guarantees access, affordability, and long-term growth. At the center of this challenge is financing. Mobilizing capital smartly, sustainably, and inclusive is the way to go. Let's look at the global context, the energy transition, and the financing headwinds. The global energy landscape is undergoing rapid transformation. Climate change commitments, evolving environmental, social, and governance, ESG benchmarks, and green investment trends have reshaped the capital flow around the world. Traditional financing sources for fossil projects are shrinking, while investors increasingly demand sustainability-linked financing proposals. This presents Nigeria with both challenges and opportunities. Divestment trends. International oil companies are exiting mature assets, offering indigenous firms a chance to take the lead. The ongoing divestment by international oil companies from Nigeria's mature onshore and shallow water assets present a dual-edged reality for our energy sector. On one hand, it signals a global pivot away from hydrocarbons in response to climate change concerns, ESG pressures, and so on and so forth. On the other hand, it offers a generational opportunity, a lifetime opportunity for indigenous Nigerian companies to take the driver's seat in resource development. This shift, if properly managed, can analyze the domestication of technical expertise, build local operational capacity, and expand the national value chain. The federal government is therefore prioritizing frameworks under the Petroleum Industry Act, PIA, and Nigeria Content Development and Monitoring Board to ensure that these divested assets are transitioned seamlessly and sustainably to capable local operators with access to finance, technology, and world-class governance practices. The higher cost of capital. Assessing funds for traditional oil projects now attracts higher risk premiums. In the evolving global energy finance environment, the cost of capital for traditional oil and gas projects has risen significantly due to stringent sustainability standards and heightened investor caution. Many international leaders now attach environmental risk premiums or restrict financing to projects that do meet specific carbon reduction thresholds. This has made it increasingly difficult and expensive for Nigeria operators to secure funding for upstream and midstream development. To counter this, the federal government is deepening partnership with domestic financial institutions, pension funds, and sovereign wealth mechanisms to create local financing alternatives. Through structured instruments such as energy infrastructure bonds and blended finance models, Nigeria aims to reduce its vulnerability to external capital fluctuation while maintaining competitiveness in the global energy markets. The infrastructural gaps. Nigeria still requires massive investment in refineries, gas processing pipelines, and power infrastructure. Nigeria's energy infrastructure gaps remains one of the most significant bottlenecks to fully operationalize or stabilize this sector. Despite vast natural resources endowment, the country continues to face inadequate refining capacity, limiting gas processing and storage facilities, and insufficient transmission networks to move energy efficiently across the nation. These gaps hinder value addition, increase operational cost, and constrain industrialization. Recognizing this, the administration of President Bola Ahmed Tinubu GCFR has prioritized large-scale infrastructural renewal through the Renew Hope Infrastructure Development Fund and the public-private partnerships. Strategic projects such as the Ajakuta, the AKK gas pipeline, modular refineries, and expanded gas distribution network are central to this agenda. An expanded gas distribution network, ensuring that Nigeria not only produces energy but also processes, transports, and monetizes it sustainably for long-term national growth. In this context, ladies and gentlemen, we must innovate, moving from dependency on external finance to leveraging domestic, blended, and transition-aligned funding mechanisms. The government policy directions under President Bola Tinubu, under the leadership of President Bola Ahmed Tinubu GCFR, the federal government has taken decisive steps to reposition the energy sector for growth, resilience, and sustainability. The key policy actions such as, in example, the Presidential Initiative on Energy Transition, designed to deliver 30% renewable energy in Nigeria's mix by 2030, the Renewed Hope Infrastructural Development, prioritizing energy generation, transmission, and distribution projects across the Federation. The Electricity Act 2023, which decentralized power generation, empowers subnational government, and liberalizes the energy market. The fiscal incentives under the Petroleum Industry Act that promotes investment in deep water, frontier basins, and gas utilization projects. Of course, the declaration of a decade of gas initiative, collaborations with international development partners to unlock green and blended finance for clean energy ventures. These reforms are anchored on the President's Renewed Hope agenda, building a competitive economy powered by reliable, affordable, and clean energy. Financing the transition, the strategic pillars. To translate vision into execution, the federal government's financing strategy rests on 4 interlocking pillars. Gas anchor as the anchor and transition fuel. Gas remains Nigeria's strategic bridge between today's energy realities and tomorrow's clean energy future. President Bola Ahmed Tinubu has therefore reaffirmed Nigeria's commitment to the Decade of Gas initiative, positioning natural gas as the cornerstone of our national energy strategy to drive industrialization, generate power, create jobs, and serve as a key transition fuel towards a cleaner, more sustainable energy future. The AKK gas project, flare gas monetization, the gas-based industry are all contained in these moves. Mobilizing the domestic capital. Nigeria must increasingly finance its energy ambitions from within. Working with the Central Bank of Nigeria and Security and Exchange Commission, SEC, to structure energy infrastructure bond and channel long-term domestic funds, including pension and insurance assets, into the energy sector. I'm very sure yesterday you must have seen the presence of Murphy at the SEC. If you haven't, you can check that out and consider some of the advantages that's going to come with. Empowering InfraCorp, the Bank of Industry, and the Sovereign Green Bond Program to drive investment into transition, refining, and renewables. Strengthening indigenous oil and gas operators through the Nigerian Content Development and Monitoring Board financing windows and asset divestment support. Leveraging international climate finance. Nigeria continues to engage with international finance institutions such as Green Climate Fund, GCF, African Development Bank, and World Bank to access concessionary funding and de-risk renewable investments. By strengthening transparency, policy consistency, and governance under the PIA, Nigeria is restoring global investment confidence and attracting fresh capital into the sector. Blended finance and public-private partnerships. The future of energy finance is hybrid. Government is deploying blended finance models that combine public guarantees with private capital to fund off-grid solar systems, hydropower, and mini-grids. Additionally, enhanced public-private partnership frameworks are aligning profitably with sustainability, ensuring independent power producers, IPPs, thrive under clear, predictable regulations. Ensuring a just and inclusive transition. I heard the many discourses that have happened under this sub-thematic area. And it's very crucial to our nations for us to all be able to speak and understand one affordable transition that will not shortchange the development, national development of our country, and of course, access to energy. Our transition must be just, therefore, equitable, orderly, pragmatic, and people-centered, reflecting our national realities. As a nuclear scientist and an environmental scientist as well, this is very crucial. This discourse in all quarters, all corners, and a lot of misunderstanding. We must transit gradually to still be able to retain our national development goals, because Nigeria must also develop. We cannot develop at the expense of access to energy by the common person as well. So we cannot pursue decarbonization at the expense of energy access or national growth. According to the International Energy Agency, fossil fuel will remain an integral part of the global energy mix for the foreseeable future. In Nigeria, gas will continue to anchor industrialization, transportation, and power in the medium term. Meanwhile, government initiatives such as the Solar Niger Program and Rural Electrification Fund are expanding access for rural communities, women, and the youth, ensuring that no one is left behind. Access to affordable, reliable, and clean energy remains both a development imperative and social contract under the Renewed Hope agenda. The way forward, ladies and gentlemen, from vision to impact. To finance the future of Nigeria's energy sector, we must deepen collaboration between public and private sectors, build investors' confidence through transparency, accountability, and consistency in policies, promote innovation from carbon markets to digital financing tools, and integrate sustainability metrics into every investment decision. The challenge before us is not necessarily resource, but the resolve. Nigeria's endowments are vast. What remains is to finance wisely, execute boldly, and collaborate sincerely. In conclusion, therefore, powering Nigeria's future, distinguished ladies and gentlemen, members of the press, the journey toward a sustainable and prosperous energy future, it's a shared responsibility. The federal government remains resolute, providing the enabling environment, policy consistency, and institutional stability required to unlock private investment. We invite all stakeholders, therefore, domestic and international, to join hands in this transformative journey. Together, let us power not only our homes and industry, but the dreams and aspirations of generations unborn. Thank you, and may God bless the Federal Republic of Nigeria. Distinguished Senator George Akume.
Thank you. Thank you very much, Professor Bolaji Babatunde, who is the technical assistant to the Secretary to the Government of the Federation, His Excellency Senator George Akume, CON, speaking on behalf of his principal and laying the first foundation stone of our soon-to-start conversation. Let's please give him another round of applause. We're going over now to the second keynote, and from rising to the zenith of his career in the fourth estate of the realm, to working as the voice speaking on behalf of the National Oil Company for many years, to advising 4 different ministers of petroleum resources, and representing Nigeria at OPEC as Nigeria's OPEC governor. Our next speaker has honed his professional skills across diverse sectors of the economy. But of great importance to us this morning is that upon assumption of office as the current Secretary General of a critical body for the oil and gas industry in Africa, he not only delivered on that job, he took that whole office and the whole associate organization to a whole new height, earning them respect globally and giving them seats on tables where Africa would ordinarily be thrown under the table. He's one of us, and today he's talking to us on something that he has also demonstrated capacity in. De-risking investment in Nigeria's evolving oil and gas landscape, the role of financial institutions in mitigating risk and attracting capital. He's been working with Apple, he's been working with NCDMB and Afrexim Bank to help African energy companies attract capital. Please welcome His Excellency Dr. Omar Farouk Ibrahim, Secretary General of Apple.
Thank you very much, lip service. I was just telling the president of NAPE that lip service said to speak on something that I'm not asked to speak on. When I sat down, I saw this for the first time, and I saw that I'm to speak on de-risking investment in Nigeria's evolving oil and gas landscape. That's not what my letter said. My letter asked me to speak on financing the future of Nigeria's energy sector, navigating energy transition, and driving sustainable development. But before I speak on this, I want to commend the SGF, his representative, for something that has bothered me for some time, not just about Nigeria, but Africa when we go to international fora, particularly COPs, and we go and we say that these are our NDCs. As advisor to 4 successive ministers of petroleum in Nigeria, I had been very worried when, before we go to COPs, we sit in different agencies, Ministry of Petroleum, Ministry of Environment, the presidency, to craft what we are going to present at COPs. And when you go and see people meeting in this place, you ask whether we know what we are doing. I have gone to such meetings to see experts from Europe and from the IEA sitting with us, guiding us on what we are going to write as our NDCs. And then we go to Sharm el-Sheikh or Azerbaijan or wherever COP is, and we say, this is our NDCs. We are just deceiving ourselves. I'm happy to hear today that this is changing. I'm also happy that you brought out the limits of ideology in the discourse on energy transition. And there's no better way to show this than to point at the International Energy Agency that for many, many years has been telling the world that we are coming to the end of fossil fuels. Today, in their reports admitting that post-2050, fossil fuels will still play an important role in the provision of oil and gas. Ladies and gentlemen, the biggest challenge we have on the African continent is that our intellectuals, our academics, our leaders they have lost or they have outsourced their intellectual thinking. They don't do it anymore. We sit and we just hear what Europe, America, and the so-called developed countries say, and we want to develop on that. I think this is very, very critical, and if we want to move forward, we have to learn to be independent. Ladies and gentlemen, I always say that I like prepared speeches. I speak, many people say you speak better when you speak off the cuff. I say I know. But I report to 18 governments. So I can't afford not to have it in writing in case any of the governments say, no, you have said, I say, this is it. After that, when I speak off the cuff, then that's my own opinion. But when I read here, I'm reading what is the official position of my organization, something that I can defend. Thank you very much. Ladies and gentlemen. Sorry. Okay. Financing the future of Nigeria's energy sector, navigating transition and sustainable development. Captains of the industry, ladies and gentlemen, I thank the organizers of this very important event for the invitation to speak to such an eminent group of industry players. Having traveled to every corner of the African continent where oil and gas are produced, I can confidently say that you are an eminent group of industry players, not just in Nigeria, but on the African continent. The NAPE and Energy Institute have over the years played defining roles in shaping the policies, partnerships, and innovations that drive Nigeria's oil and gas industry. I commend these national think tanks for consistently fostering dialogue between industry and policymakers, and for focusing this year's executive session on such an important theme, financing the future of Nigeria's energy sector, navigating energy transition, and driving sustainable development. Kindly permit me to broaden the topic and rephrase it to financing the future of the African energy sector, navigating transition, and enabling sustainable development. The reasons are, first, the Nigerian energy industry, in particular the oil and gas sector, is a pace setter in Africa. What Nigeria does is what is copied on the African continent, especially in the sub-Saharan region. Second is that African countries can best master the energy industry, finance, technology, expertise, and markets when we work together in collaboration and cooperation. And we end the silo mentality that has characterized our relationships since our different countries began to produce oil and gas. Distinguished ladies and gentlemen, the world is witnessing an unprecedented shift in global energy dynamics, climate change imperatives, evolving market expectations, and capital reallocation are reshaping how nations think about energy security and sustainability. For Africa and for Nigeria, the continent's largest oil producer, this transformation presents both a challenge and opportunity. We face the challenge of attracting financing to sustain and expand our hydrocarbon sector amid declining global funding for oil and gas projects. Yet, we also have the opportunity to design a uniquely African path, one that balances our development needs with environmental responsibility and economic diversification. To make any informed proposition on the future of financing of oil and gas in Africa, it is imperative to know where we are coming from. For nearly 100 years that Africa has been producing oil and gas, it has been heavily dependent on foreign financing for exploration, production, processing, and even marketing. To most African governments, especially of the sub-Saharan region, oil and gas are export commodities meant to bring foreign exchange to finance government expenditure. That was the orientation our leaders were given about our energy, namely a source of revenue to finance government budgets and to live ostentatious lifestyles. Energy, we were told, is too expensive for the poor people of Africa. We were also made to believe that the energy industry is highly capital intensive and that it made no sense for poor countries to expend most of their limited resources developing energy infrastructure when they can rely on imported energy. We were made to believe that it made better sense to get fast revenue from royalties, taxes, and crude sales than to invest in energy infrastructure that will allow us to find, produce, process our energies. For as long as Africa's crude oil and gas are defined as export commodities, the funding for the exploration and production are guaranteed by international capital. So, for nearly 100 years, Africa was contented with receiving royalties, taxes, and crude sales revenues to meet budgetary needs. And we became heavily dependent on foreign financing for our energy industry. Then came the Paris Climate Agreement of 2015, which ushered in the global paradigm shift on energy sourcing, from fossil fuels to renewable energies, euphemistically called the energy transition. In their pursuit of the Paris Agreement goals, the traditional financiers of Africa's oil and gas industry, mostly from the global north, decided to discontinue funding Africa's oil and gas projects. A major study conducted by APO in 2021 on the future of the oil and gas industry in Africa in the light of the energy transition established 3 imminent challenges. These were the challenges of funding, of technology, and of markets. Basically, we realized that in the nearly 100 years that a number of African countries were producing oil and gas, they never made it a priority to be able to control the financing of that industry. They never made it a priority to be able to control the technology and the expertise of the industry. And they never made it a priority to be able to control the marketing of that industry. Many people say, well, it's true, Africa doesn't have money. I have always said it's not true. I don't believe Africa is poor. It's just a matter of prioritizing. And I always give example with personal experience. In 2002, oil prices were considered very low if they go below $22 per barrel, and they are very high if they go above $28 per barrel. If they go above $28 per barrel, OPEC, where I was working at that time, will make sure that they call an emergency meeting and they will increase production by 500,000 barrels a day in order to bring down the price to that level. If it goes below 22, they will call an emergency meeting and they will reduce 500,000 barrels a day in order to stabilize. But from 2003, oil prices began to go up. I remember in 2004, we had 7 extraordinary OPEC meetings, 9 plus the regular ones, each time increasing 500,000. Yet, oil prices were going up 22, 30, 40, 50, 60, 70, 80. By 2008, oil price was nearly $150 per barrel. And globally, almost every country was producing more than what it was producing in 2008 compared to 2002 or 2003. In Nigeria, your highest production figure, crude alone, no condensate, was 2.5 million in 2005. At $140 to $150 per barrel. Knowing that oil is critical to the national economy, what did you do to control the financing of that industry? We were comfortable, IOCs and others, World Bank, and so on, to come and put their money, and we are just interested in royalties, taxes, etc. Now, the chickens have come home to roost. And it applies to other countries, not just Nigeria. I'm able to say this because I'm a Nigerian, so I can criticize my country in my country. I won't do that outside of my country. The same thing with technology and markets. The study, having reviewed the capacity of African oil and gas producing countries, also came to the conclusion that individually, no one African country has all that it takes to address the identified challenges. However, working together, Africa has all it needs to address them successfully. It was these findings that informed APO's decision to partner with Afrexim Bank to establish the Africa Energy Bank, whose headquarters is located in Nigeria's federal capital of Abuja. Only 2 days ago, I was there to inspect work on the headquarters. Yesterday evening, I received a copy of a letter from the Nigerian Minister of State for Petroleum Resources to the APO president and other APO ministers and the president of Afrexim Bank, proposing that 27th of this month for the handover of the headquarters to the promoters of the bank. I had thought I was going to be on the, because when I came here in the car from the airport, my colleague, Temi, told me, I had told her I had abridged my speech because I'm going to be on the panel. She said, no, you're not on the panel. So what I was planning to say on the panel, I think I will it's easier for me to say that on the panel because then I'm speaking my mind. For now, I would like to say that financing the future of the African energy industry requires a new paradigm shift. We in Africa have accepted the global paradigm shift away from fossil fuels. We have also accepted that that shift has thrown up new challenges for us as an industry, as a people, and as a continent. Yet, we have been using the same old tools to analyze the new problems thrown up by the paradigm shift. Our intellectuals, our academics, our philosophers, writers, and leaders have failed to move out of the old tools. They have remained stuck to old tools, yet looking for answers for new challenges. I say that time has come for our academics, intellectuals, and leaders to begin to think outside the box. They should break from the received wisdoms. They should be adventurous in searching for solutions to the new challenges we face. I recall that when in 2022, Apple and Afro-Exim signed an MOU in Luanda for the establishment of the Africa Energy Bank, many Western industry and finance people asked me if we knew what we were doing. Many asked, where will Africa get the money to start an energy bank, given the fact that the bank will require huge equity capital? Not surprisingly, some of the naysayers were Africans. They have no confidence in themselves, nor in their continent. What Apple and Afro-Exim Bank have done is novel. Few people believed in us when we came up with the idea. Permit me to express appreciation to the immediate past president of Afro-Exim Bank, a true para-Africanist and a visionary for the African cause, His Excellency Professor Benedict Oke-Orama, for the exemplary leadership role he played in the establishment of the Africa Energy Bank. He was a great ambassador of Nigeria at Afro-Exim Bank. Let me give you the story of the beginning. When my team came to me that, look, Afro-Exim Bank is trying to establish Energy Bank, and we are already working on this. I said, Afro-Exim Bank cannot do that. We'll take them to court if they do that, because we went to Afro-Exim Bank and took them as our consultants for Africa Energy Investment Corporation. And we told them what we're doing, and we paid them money. They can't hijack that project. I sought audience with Professor Orama. He said, I'm going to be in Abidjan on so and so date, if you can meet there. I said, sure. I flew into Abidjan. We sat down. In less than 30 minutes, I was convinced that this is the man we want to work with. As I came out of the office, that meeting, I picked my phone, I called the president of Apple, the minister of Luanda, Angola, and I said, Mr. President, I would like to come and see you. He said, take the next available flight. I got to Angola, and I said, we have ICOP. ICOP capital is 1 billion. 1 billion is nothing in the industry. I want us to do something big. But we cannot do something big because we are not bankers. I want us to partner with those who have an experience. He said, Farouk, whatever you say, I trust your judgment. Go ahead. I said, but Excellency, you don't have the power to do that. You will need the approval of the Ministerial Council. He said, I am the president. I have given you anticipatory approval. Go and start this work. I will call an extraordinary meeting in the next 2 weeks. And that is how we met in Angola, and we signed that MOU. And thank God, between 2002 and 2022, and now we have reached the end of the road. We are talking of when will the bank be launched. Everything has been met. I would like to commend the government and good people of Nigeria for their active participation in the fundraising for the Africa Energy Bank. It may interest you to know that Nigeria today is the biggest shareholder in the AEB, with about $120-something million. The time has come for Africans to look within for their salvation. No one from outside will come and develop our continent for us. And the first challenge is funding. We need to liberate our economies from the shackles that we have put ourselves in. And I challenge our finance experts to come up with new ideas on how to finance the energy sector of Africa. The traditional means have failed Africa. We want new approaches. And those new approaches are not, Mr. Professor, they are not green bonds. They are not climate bonds. We should think outside the box. All of this you're saying are received wisdoms. What is preventing African intellectuals from coming up with something that is not in the books of those who have dictated to us for the last 100 years? Africa must not rely on climate funds, by whatever name they call it, to develop your energy sector. It's a huge deceit. Bank loans, credits, etc., cannot finance energy in Africa and still make energy affordable and accessible to the people. This is the challenge that you have to address. Distinguished ladies and gentlemen, if Sukuk can raise hundreds of billions to do roads, why can't Sukuk raise billions to do oil and gas, which is even more important, energy? There are many, many ways to raise funds, but our orientation is this is the way we have been made to believe to raise funds, and we are not looking outside of that. And this has to do with our educational system. We have failed as a country, and the earlier we looked within to ask ourselves, are these received wisdoms what will get us out of what we are today? The earlier we did that, the better for Africa. For now, in Apple and Afrexim Bank, we have done something that nobody believed we could do. And I want to assure you that by the end, maybe first week of next month, we will be able to tell you when Africa Energy Bank will take off. We are looking for just 100 million now. We have over 80% of what we need. Distinguished ladies and gentlemen, I will be around to talk outside of this so that I will be freer to speak about my mind. As I read these ones, I keep telling myself, are you saying what your ministers have agreed, or you're saying your mind? The good thing is, I'm on my way out, so I can say it. Thank you very much.
Thank you so much, Your Excellency, Dr. Farouk Ibrahim, Secretary General of Apple. All right. So, he's raised quite a number of pertinent issues. It was the same man he referenced, Professor Benedict Orama, who asked a question when we had a meeting of the Association of Sovereign Wealth Investment Funds of Africa. And he said, this is me paraphrasing, he said, who bewitched African billionaires to believe that African banks are not safe enough to contain their money, but rather take it outside and keep it in banks to develop other countries and buy houses they never sleep in. Back to the technology he was talking about. You remember when we were growing up, we used chewing stick to clean our mouth. They came and said toothpaste and toothbrush is the best. 3 years ago, 5 years ago, they came back and said chewing stick is the greatest science for teeth cleaning. Really and truly, we need to solve our own problems. There are engineers who do models of buildings and apply pressure like earthquake. This is where earthquakes happen, to see which is strongest. That same way, let's find our own solutions. But there are experts who will take a deeper dive into this conversation. To lead this group of experts is the Chief Executive Officer of Energy Inc. Advisors. Please welcome the delectable Rolake Akinkugbe Filani.
Thank you very much, Richmond. Good morning, distinguished ladies and gentlemen, and thank you so much, Dr. Omar Farouk, for that excellent expose. And actually, we have an executive contributors section after the panel, which I hope Dr. Farouk will be available to field questions around, just because we want to glean from that wealth of knowledge. So my assignment this morning is to bring up a group of experts, but I just wanted to highlight a couple of things that Dr. Farouk said, and then sort of paint you a small picture of what has happened in terms of funding for the industry since the last executive session last year. Dr. Farouk talked about a new paradigm shift, a new way of thinking, new ideas for financing because traditional means have failed us. He also said we don't need green bonds or climate bonds. And Africa must not rely on these funds to develop the energy sector. Well, since last year's executive session, we've moved a bit. We've had about $18.2 billion, which was approved in field development plans here in Nigeria. This is specific to Nigeria. We've had over $8 billion in FIDs related to gas sector development. We've had a $500 million gas infrastructure facility mobilized jointly by Afrexim Bank and the MDGIF. That's the Midstream and Downstream Gas Infrastructure Fund. Nigeria is now targeting around $20 billion across 70 priority gas projects. And of course, we've had the announcements from NNPC about the targets in terms of investments over the next 5 years or so. So the point is, the dialogue we're going to have today on this stage is not just theoretical. We need to talk about the actual pathways and the mechanisms that will help us unlock funding that is mobilized primarily locally. So to help us do justice to this session on financing Nigeria's energy future, I'd like to call on my panelists in no particular order. First on stage is Mrs. Abimbola Aide, the GM, Upstream Commercial and Corporate Finance, First E&P. A round of applause for her. She'll be representing the operator's lens on navigating real-world financing challenges across upstream growth. Please keep the applause going. We have Mr. Jude Chiemeka, Chief Executive Officer of the Nigeria Exchange Limited. He's leading Nigeria's capital market innovation from, I was going to say green bonds, but but the NGX is a pioneer in sustainable finance, so they deserve a round of applause. Then we have Mr. Adedapo Segun, CFO of NNPC Limited, represented by Mr. Olugbenga Oluwani, Chief Finance and Investor Relations Officer of NNPC Limited. They're obviously stewarding one of Africa's largest corporate balance sheets, and so they deserve a front row on this stage. A round of applause to him. Next, we have Mr. Oluwafemi Akinyemi, Group Financial Controller of Pan-Ocean and New Cross Companies, one of our sponsors here today, helping to bridge finance, operations, and sustainability as a dynamic indigenous operator. Then I believe, I'm not sure he's in the room, but I want to be sure, Mr. Chido Oyilimba, InfraCredit, very important. Oh yes, there he is, Head of Origination and Structuring of InfraCredit, championing local currency credit enhancements for infrastructure and gas in particular. And I think we have our complete panel. Fantastic. Another round of applause for them as we begin the conversation. So the idea that we will have about a 1-hour discussion on the panel, and then we will go to the executive contributor session, which is essentially calling on distinguished members of the audience here to make contributions and ask questions. And when you do so, please let us know who you are and the perspective from which you're speaking. So I'd like to start actually with NGX, Mr. Chiemeka Jude, if I may call you that. And I wanted to set a bit of context first. Some research I did. The question really is around how we make the NGX the default marketplace for energy transition capital. And the context is this. Out of roughly 150 listed companies on the NGX today, fewer than 10 are in the oil and gas sector. And yet, those companies that are listed generated almost 5 trillion naira in revenues just in the first half of 2025 alone. And there are more than 300 companies, I believe, that are listed on the NGX, if I'm correct. Actually, 150. So the question is, there's a huge gap in getting companies in this industry to access finance through public markets. Public markets that are owned largely now by domestic investors. The representation of foreign investment, I think we had that discussion, it's increased to 20%, but surely that is a locally grown solution. What more can we do to get companies on the NGX?
All right. Thank you very much. Let me start by thanking the organizers for inviting the NGX to be part of this conversation. And I particularly like the angle Dr. Umar used when he talked about departing from green bonds and climate bonds, that there are other elements or other ways capital can be raised. And he's quite right. If you think about what Sukuk has even done for the federal government, they've raised over 1.3 trillion naira utilizing that instrument. And that's an instrument that can also be easily utilized to fund and bridge the gap. And so coming directly to the question, what can the NGX do to help companies in this space to access capital or funding or be present in the capital market? So the capital market in itself is an aggregator of capital from investors that want this pool of funding to be available for investment, and then for the issuers that will need it to scale, like this particular sector. So there are other ways this works, and the domestic institutional investors have over 25 trillion naira, that's the PFAs, and also have asset managers in the region of about 4 to 6 billion US dollars under management. So domestic capital is perhaps available. In terms of the retail investor participation, the figure is around 850,000 retail investor participation now that are actively trading the market from a universe of 3 to 4 million investors. So if you think about the population of Nigeria, so there's a lot of scope and a lot of opportunity in this space. So how can we then help companies in this space to access capital from the capital market? So it's a plethora of several ways. The NGX itself is a multi-asset exchange. We have over 321 listed securities. So it's not an equity platform only. We have over 41 corporate bonds, and we have about 105 federal government bonds that are listed. We have 147 equities that are listed, and we have 12 ETFs. And I'll speak to ETFs because we have the largest ETF, the second largest ETF in the continent, second to South Africa. And that's also an instrument that can be utilized to raise capital for corporates. But beyond that, we do have the equity side that can be utilized very efficiently, and then the bond side that can also be utilized to raise capital. So from an NGS perspective, we're doing quite a lot of work with partners like IFC, like Mobilist, and more recently, Luxembourg Stock Exchange, which is the largest sustainability stock exchange in the world. And the whole idea really is to ensure that capital can flow easily across different geographies to be able to fund corporates that are looking to raise capital in our market. And to attest to that, I mean, year to date, the NGS has traded over 5 trillion naira worth of securities in the secondary market. Last time I was here, our market daily average was around $6 million without a devaluation. Now with the devaluation, we're trading close to $16 million a day. And I must thank the federal government for the policies they have really pursued, which is not very popular, the harmonization of the FX rate, as well as the removal of oil subsidy. That has really improved the macro for a lot of the corporates that are listed on the exchange. So the NGS will continue to utilize partnership to ensure that companies that come to our platform are able to raise the capital that they need, and also create avenue for companies to be able to utilize different asset classes to be able to raise capital and not just be fixated on equities. So that's really what we're doing to encourage more listings. The last time I was here, we had just Seplat listed. I'm happy to say that we also now have Aradel, and that's a really local champion, a local. We're just talking earlier with the CEO that they should really be the advocate for listings on the NGL for this particular sector, because their case is really a phenomenal one, and we can see the value the capital market, NGX in particular, plays in helping corporates to gain international visibility as well as the required capital to scale and fund their operations. Thank you.
Thank you very much, Jude. I think I'm going to come back and ask you about, not now, but maybe just to give you a heads up, around the barriers to actually getting on the capital markets to begin with. But I'd like to come to NNPC Limited, Mr. Uluwani, representing Mr. Dapo Shegun, the CFO. NNPC has ambitions itself to go to the public capital markets in the future, and we've heard so much about it. If NNPC is going to do that process successfully, it has no option but to tap into domestic financing. We've heard that the biggest latent pool of financing today in our domestic market is the 26 trillion naira that we have in assets, in pension funds. We have about 3 trillion in insurance funds, and we have funds, billions of dollars in corporate funds that are unutilized across the Nigerian spectrum. So what role do you actually see NNPC Limited playing in helping to de-risk investments, because you're a partner to local companies, and in helping to mobilize that domestic capital?
Okay, thank you very much. By way of protocol, you permit me to just take the thanks that Jude gave as having been done for all of us. And then apologies from my boss, Dapo Shegun, for his inability to just grace this occasion. It's not by design. He didn't have a choice. But thank God I'm here representing him. And to go to your question around the subject of de-risking oil and gas project or expenditure profile for the local industry, I think one of the major things there, and it cut across operators in this sector, but I will speak to NNPC's aspect. One major thing here is to start with ensuring that projects are presented in bankable formats. It's not enough to just invest in the industry. It is important that such investment is capable of yielding either long-term or medium-term or even short-term returns for the providers of capital. In addition to that profit expectation from providers of capital, one of the key major aspects of consideration for them will also be the risk factor, which is the point you are actually zoning in on in this engagement. And the industry is a high-risk industry, but one of the ways to mitigate many of those risks is to ensure bankability of projects, like I mentioned. In addition to that, is to be able to assure consistency and regularity in revenue generations from these projects that are to be financed. Where that is there, it takes away the risk of repayment, which if it fails, it becomes a very big problem. In our recent history, we had a situation where the banking sector actually faced an existential challenge. And when you dig into the root, you find out that the significant exposure to the oil and gas industry, and that created that challenge for the banking sector. So, ability to predict to a reasonable extent the revenue flows that will service those financing exposure will be very, very critical for companies to make sure it's protected. The other side is guarantee where possible. Usually when we approach the market as a company, one of the first things that they ask for is, can you give us national guarantees? Unfortunately for us, by the design of the PIA, access to government fund is specifically outlawed. And so NNPC as a company will not be in a position to provide sovereign guarantees for exposure to it from the industry. But beyond that, in the financings that we have done, in addition to the economies of the project, which must meet the minimum criteria for bankability, NNPC as a company actually puts its own balance sheet on the line to support such exposure by giving guarantees to the providers of capital as a backstop. Thank you.
So I thank you very much, sir. I want to come back. You used the word bankability several times, and you talked about clear line of sight to revenues. Can you maybe introduce other aspects of bankability? Because if we look at the operators in this market, we always hear about bankability. In today's Nigeria, given the current macroeconomic situation, what is true bankability for a project? That's number one. The second question is, many Nigerians who read the news are very familiar with NNPC's financing models in recent years. And if you listen to what Dr. Omar Farouk has said about moving away from, in quote, borrowed models from Western nations, the future of prepayment, pre-export structures, in fact, Nigerians sometimes erroneously, or I guess subjectively, refer to it as mortgaging the country's future oil barrels for financing. How sustainable are those forms of financing for an NNPC? And is there a more innovative way or other ways that NNPC is thinking about funding? So address the bankability issue, help us break it down a bit more, and then address the funding models.
Okay, thank you very much. And I think that will be an opportunity for me to give great regards to Dr. Omar Farouk Ibrahim, for that excellent contribution to this discourse. It touched on many salient points that we will still discuss, and I think that's a great one. Thank you, sir. Bankability is a straightforward thing. It just means that project proposals are designed and structured in such a way that they meet the investment criteria that will provide comfort and confidence to the providers of capital. Such criteria will be returns, the ability of such project to actually repay the investment. And where that is not totally assured, the fallback option that will be available should there be challenges during the implementation of such a project, the fallback option, and that's what banks usually would refer to as securities. Another side is the risk mitigation that are available for such project. There are several risks associated with projects. One is the risk of completion. You can start, there's no guarantee that you finish it. If that does not happen, what happens to the money that's gone into the project? How does the financier, who is not the primary risk taker, gets back its resources? So there must be mitigants provided to provide sufficient guarantees and comfort for providers of capital. We can go on and on, but I will limit that to that for now. In terms of the PXF financing, pre-export financing, which is just a way of finding solution to today's financing challenges or gaps by leveraging on the expected production both for now and the future. And if we speak to that, one aspect is the fact that Alaji touched on, necessity is the mother of invention. When you face existential challenges, you have a responsibility to find very creative and homegrown solutions that will cure today's gap. In doing that, you may create another challenge which may be smaller and probably in the future. But you need to live today in order to face tomorrow's challenges. And that's one factor that is very critical. And sometimes the challenges that you envisage also have workable solutions that you can think around and solve. For instance, you're talking about committing tomorrow's output. Question is, what's the guarantee that there will be output tomorrow? But those are factors that you build into the conversation and into the planning in such a way that sufficient comfort is provided to assure providers of capital. And more often than not, the challenge is not about whether entities take loan or not. The more important challenge will be what use are such exposures deployed into. One of the principles is that you actually accept if there's a life and death issue, you should not borrow to consume. And that's one of the challenges that we had with subsidy. We were actually borrowing to finance consumption. And we should be borrowing to finance investment because it is today's investment that will guarantee tomorrow's income. And it's when we have income that we are able to pay the loans and meet the needs of the future.
Okay, all right. Thank you very much for breaking that down for us. A round of applause for him. I think I sort of wanted to just put him on the spot just a bit, but thank you for doing it justice. I'd like to come to you, Abimbola, as an indigenous operator. I've had the privilege in a past life to work with First TNP. I know that you're one of the rising crop of indigenous companies who are building world-class institutions, trying to do governance right, go through the process, and you have an excellent bench in terms of expertise. What have been some of the specific challenges you face historically in accessing finance, and how are operators like yourself rethinking funding options into the future? Can you share some of your experiences with us? Can we check her mic, please? Still not on, sorry.
Can you hear me now? Yes. Okay. Thank you, Rolake, and thank you to the organizers for inviting First TNP. Indeed, it has been a long journey from the inception of First TNP till date, and we've had a very interesting financing journey. In terms of our experience from inception, I would say that we have a running joke internally that we need to write a book. And the reason is because we went through all the various waves of what could possibly go wrong from an external perspective, in terms of the fact that there was, at a period, there was decline in oil prices. There was liquidity squeeze in Nigerian banking system. There were issues with some of the listed entities, indigenous listed entities. So essentially Nigerian operators became a target in terms of speaking to international financiers. But having said that, what helped us and what has brought us this far is the fact that we focused on the important things. And what would I say those things were? First of all, for any operator, your biggest hurdle starts from when you actually acquire your assets. If you acquire assets at bloated prices, if they're overvalued, you've already shot yourself in the foot from the get-go. Secondly, you need to acquire assets that we've talked about bankability a lot, but from an operator's perspective, bankability is making sure that you can actually show or control your destiny from the point of production to the point of sale to demonstrate to your financier that you will be able to repay. It is about, for us, it was about looking at our field development plans and making sure that we are actually not presenting projects that will go into deep holes, which is cash sinks, for a long period of time without generating cash flows. So we made sure that we developed our project in a phased manner, ensuring that you manage that funding gap and you can show in very short order the production that is needed to repay your financing. For us, governance was important. So we made sure that we had a world-class board, a world-class team of executives to ensure that whether it be locally or internationally, we can demonstrate that we actually know what we're doing. And so where you see situations where you have minimal capital coming into Nigeria because of the various external forces, you would be one of the preferred people to be financed. The other thing which is often overlooked is the fact that you need to manage the cost of your development. If you have bloated projects, or even, it's not, let me know you even use the word bloated. Thinking outside the box in terms of making sure that you're looking at technology, right? You're looking at basically concepts that would enable you to manage your cost of development, ensuring that your unit development costs and unit operating costs are low, enables you to raise capital and demonstrate the fact that you will be able to repay even when oil prices are deemed to be volatile and banking case decks are very low. The other thing is, prior to the advent of ESG and the I would say the constant watch of your environmental, social, and governance standards, this was already something we had baked into our priorities. So it wasn't actually difficult for us to demonstrate that we are actually taking governance seriously, taking environmental solutions seriously, and managing our social, basically social capital properly. So I would say it is, as an operator, to unlock capital, you need to, first of all, do the things that makes you stand out and makes you attract investment from any source. Now, another thing that is also overlooked is the support that you can get from your local financiers. During this period where international financiers basically were running away from oil became a dirty word, and international financiers were basically locking their war chests, we were supported by local banks. And these local banks have stood by us from inception, even when we were not producing, until date. So do not underestimate the capacity of local banks and regional banks that will support you when the rest of the world basically walk away from you. So I think those are the things I would say for now.
And it's interesting you mentioned local banks, because other companies have different experiences, but I know that First EMP has been supported from day one. So would you put them above other types of finances as your preferred go-to partner for where you are today? And the reason I say this, because I know First EMP also has trader involvement, right? And you have ambitious plans to expand, to grow your gas development business as well. Will local banks be able to carry you throughout the cycle of those opportunities? Very briefly.
So we know that local banks will not be able to provide the full financing we require. But what local banks do is basically de-risk that banking chain. So when they come and they're willing to provide the early capital for you to de-risk your project, then other international banks basically follow. And we're experiencing that today.
Sure.
We have an influx of international banks that want to work with us
From the West.
from the West.
Okay.
And they are essentially telling us that they are now able to finance oil and gas projects, and that whilst they have this green light, they also have limited capital, and they will go with basically operators that have demonstrated capacity. But when we need it, again, there's another joke where we say, when you do need that umbrella in the rain, they are not the ones you look to.
Yeah, sure.
It is your local financiers that will at least allow you to start, and then the international banks come.
Okay, fantastic. Thank you very much, First MP Bimbola. I want to come to Pan-Ocean New Cross. You know, I know one of the things you're very passionate about is sustainability. And because we're talking about sustainable finance, and every single oil and gas company in this market has ESG, is doing sustainability. So from a corporate finance stand-up, what would a balanced energy security and sustainability portfolio look like for a Nigerian indigenous operator today? Is it that you're just doing your community relations, or is it that you're powering your operations using solar? Are you offsetting your footprint from a carbon perspective? What does that look like?
So thank you very much, Rolanke, and our wonderful audience. So for Pan-Ocean New Cross Group, we see transition not as a threat, but an opportunity for innovation and also for adaptability. And deliberately and intentionally, we are making investment into, first, to ensure that we're able to optimize our asset base. So we have gas, in abundance. So we are putting in the required investment first to be able to, realize value first, and also knowing that we need to align with, the carbonization mandate and all of that. So we're restructuring our operations to be able to first reduce our carbon footprint. So we're looking at, using solar panels, and also for the communities that we provide power supply to. So we're thinking of how to, switch to renewable sources, sustainably. So, but the reality is that in terms of portfolio structuring, we have to start from where we are. That's the honest truth. And we must be realistic in terms of our position in the global community. So why I'm saying that is that, though we recognize that climate change is something that is being talked about around the world, but also, just like what Dr. Farooq mentioned, I fully align with that we need to look at our own situation first, because energy access is key, and also affordability. So we need to, first of all, see how we can attract investment. First, to optimize what we have. We need energy to power industrialization, to create jobs, and also to grow the economy. So, and that would give us, the consumer base. Actually, one of the problems is that even when you have this sources of energy, affordability becomes an issue. So you can see that all of these are linked together. So growing the economy to create jobs, to enhance the income generation of the populace, so that they can actually, purchase, this energy for themselves without actually these subsidies and all of that that often interfere with the market system. So, and basically that is the way we see it, that first we need to be, start from where we are, use what you have, build your capital. Now, like Dr. Farouk mentioned, financing is a key problem. So, and over time, there has been a lot of dependence, our silver dependence on external capital. And that's because the local banks, they are doing their best, but they're also constrained by issue of single obligor limit. And that is why I also feel that the current financial reforms that look at how to, increase the capital base will further, enhance their ability to, provide some support. So it might not be 100%, but when you look at, blended finance structure, they can come in at least to play a role. So for us is in our portfolio, we're looking at gas to start with because it's a transition fuel, and then scale up with renewables. So we have a firm that is actually doing a lot in research, also looking at investment into renewable energy, wind turbines and hydrogen, to be specific. So, so that's where I see gas, then renewables. Thank you.
Okay, thank you. So essentially, you're looking across your entire value chain in terms of operations, and you have these many touch points. So I want to come to InfraCredit. And InfraCredit, you have a very clear, well, maybe I wouldn't say clear policy of not doing upstream. But one of the things I've observed about the financing that's available for infrastructure, climate, alternative energy is that it seems to be a lot more creative. So you have instruments like your credit enhancements, your guarantee structures. For long, the sector, the industry has essentially been bankrolled by the domestic banks. But the institutional capital, the pension funds, are still pretty conservative. We've had some new reforms lately. But you need their money in order to do what you do. How can you and the work you do help us unlock that source of capital? Is there a new type of financing product we need to introduce into the energy sector today in Nigeria that will be the game changer for pension funds into our energy sector? I'd like to hear your thoughts on that.
Thank you, Rolake. And
I think you need to move that mic closer.
okay, is it better now?
Can you hear him?
Can you hear me?
Okay, great.
Thank you, and good afternoon, everyone. Thank you to the organizers for inviting InfraCredit. I think I can say the only financier in the panel. So just a brief background about InfraCredit. We were set up by the Nigerian Sovereign Wealth Fund in 2016. We commenced operations in 2017. We've been capitalized enough to support projects of up to 1.5 trillion naira. To date, we've done just a little over 300 billion. We've transitioned to become a PLC, raising additional capital from the pension funds to enable us to underwrite more projects. We have a clear eligibility criteria, like you highlighted. We can support gas and not oil, unfortunately. The idea was to create a diversification away from oil. Nigeria was heavily dependent on oil. There had to be some institutions supporting gas as an input to the power sector. We all know where we are with energy deficit in Nigeria. So that's InfraCredit's mandate. We backed the first green bond. I heard my colleague NGX talk about green financing. We backed the first green bond in 2019, extending the yield curve in the capital market then by up to 15 years. We've subsequently supported 20-year financing. So here we are, sitting with the PFAs, able to support long-term fixed-rate financing for projects. Now, 1.5 trillion naira cannot finance the entire market, which is where we come in with our partnerships with international DFIs and international partners. We were developed by Garanco. Garanco is a member of the Private Infrastructure Development Group based in the UK. We are also supported by Infraco Africa, the African Development Bank, African Finance Corporation. I believe, like Bimbo mentioned, the local institutions understand the local nuances around financing projects locally, and we are here to support projects. In summary, we're here to support you, get the projects bankable, and connect you to the long-term financing that's available locally. Pension funds alone are sitting on over 25 trillion naira and are willing to deploy this capital into eligible projects.
Thank you very much. I think just for the tech team, some of the batteries on the mics are going out, so we may need to check that. Okay, so you talked about the support for gas infrastructure. There's only a certain amount of pension fund money that's being channeled through InfraCredit. It's going specifically towards gas infrastructure. If you look at the energy sector as a whole, given the experience you've had in developing specific products for gas, credit enhancements, what recommendations would you actually make in terms of the products that might support other parts of the energy sector value chain based on the experience you've had working with pension funds and long-term infrastructure projects?
Thank you again. So I'll look at it more, not in the line of products, but more in what's required. My colleague in NNPC mentioned bankability of projects. Every investor is willing to invest in a project that is bankable. And he's explained what bankability is well enough. I will just add and expand to what he said around incorporating corporate governance. That's something that's usually lacking in projects. You have a project, the contractual arrangements are not developed in a manner that can stand the test of time. The operations of the project are dependent on a few individuals. Once you begin to incorporate corporate governance in your projects, ESG considerations ultimately would be taken care of as part of the solution that ultimately comes to the investors. Thank you.
Thank you. I think if there are members of the audience that would like to ask questions, please get those ready so we can delve a bit deeper. I'd like to come to both the NGX and NNPC Limited. I want to come back to what I think will be the biggest capital market event, not just for Nigeria, but for Africa, if NNPC goes public, right? And that also depends on a partnership with NGX. Can you tell us about the significance of such a move and how you're preparing for that partner, to leverage that partnership to drive that? And what lessons have you learned from other markets, whilst we don't want to borrow their models, about these types of listings and what it means for a country like Nigeria, being Africa's largest oil producer? So I'd like to start with NGX to just hear your thoughts about this potential, and then I'll come to NNPC Limited. Yeah.
All right, thank you. Of course, we're looking forward to that great day. Yesterday, the Minister of Finance or the Coordinating Minister of the Economy was at the NGX to list the Murphy real estate bond, which is also part of the innovation away from a traditional instrument that the market is used to. So from an NGX perspective, I think the market is ready. Our trading platform is world-class. We use NASDAQ, and that has the ability to trade over 10,000 trades per second. So in terms of infrastructure, we do have the capabilities to do that. In terms of partnerships and ability to distribute, we do have the ability to do that. You recall that the banks, on the back of the policy from the central bank to recapitalize, have utilized the NGX. They've raised over 2 trillion naira utilizing the NGX. And we did that through a digital platform. And I must commend the SEC, the DG of SEC, for pushing and ensuring that distribution is not done digitally. What that does is that it shortens the cycle of a capital raise event. And NNPC will benefit from that initiative that is now in place. If we think about what has happened in other jurisdictions where the state assets were privatized, it will really come from the right governance structure, like building confidence, FX for international investors that will be investing, like we saw in Angola, will be a challenge to consider. And we thank the federal government for the FX harmonization that they have done and the liquidity. I think the central bank governor should be commended for stabilizing the ship, and we now have FX liquidity to be able to attract international investors in our market, because that will really be required when a company like NNPC goes live. The other element to also consider is really around the positive of the company itself, the ability to manage its debt, and I believe that NNPC will talk around that, and to inspire investor confidence, the ability to have a positive cash flow, because when you get listed, it's completely different from when you are a private company, because now your performance will really be determined on the secondary market pricing, which will rely on the performance of the company, the sort of leadership and the structure that they have in place. But we've seen what happened in Saudi Arabia and Abu Dhabi, and I think it won't be difficult to do in Nigeria because of the way our market is configured. Year to date, the NGS has been able to facilitate over 7.3 trillion naira across different asset classes. So our market is mature enough to handle an issue like NNPC, and we really look forward to when they will come to the market. Thank you.
Thank you very much. NNPC.
Okay, Roleke, can I crave your indulgence a little? I'll come back to this topic, but I want to make a comment on Femi's input. That's info credit. Okay, thank you. So if we take it from part of what Dr. did mention about the need for us to have homegrown solutions to our involvement in the industry and actually take control. Part of what Femi did mention was the fact that InfroCredit was set up, but with a restricted agenda. They can only finance gas project. And you will look at that as an effort to just position the country in a compliant position for the carbon neutrality agenda. But when you look at today, that's a vision, that's a target. I think there's an adage in our climb that says that when the meat is properly roasted, it is both delicious and nourishing. But then, between when you get that roasting process to maturity, something must keep the body going. And for us, you have the transition agenda, which is anchored largely on gas production. But the objective is not to, at least for today, totally disincentivize investment in the oil and gas industry for us. A country like America came with Trump, and they went back to that in a very significant and aggressive manner. We are the ones in need here. We have a resource that will go out of fashion, whether we like it or not, in the foreseeable future. The best we can do is to maximize the advantage that it portends in the now and in the nearest future. But if we set up a organization like InfroCredit and already restrict it from supporting that need that we have, practically we're shooting ourselves in the leg. Unless we have another agenda to support that immediate need that we have, because the international banks are no longer able to do that, even if they want to. There are regulatory dimensions that kind of restrict their ability to support that vision. So we need to grow our own solution, and create local solution that addresses our local challenges in totality. So that restriction is an area that we may need to look at and maybe mend a little bit, or if we're not touching that, make another arrangement available that will address today's need. That's a thought I have. But thank you. And looking at the IPO for NMPC, I think part of the objective of the PIA principally was to take NMPC on a transition journey, move it away from regulatory responsibility in the industry, and just enable it to focus deliberately and purposely on commercial operations. In that wise, you will be exploring opportunity for value creation, value growth in such a way that it benefits not just the company, but even the nation at large over time. And more often than not, when we look at a company like Saudi Aramco come up with their periodic performance result, the next question you find yourself asking is that this company and our own jewel, NMPC, they're operating in the same industry. What makes the difference? Why are they able to consistently post positive, mouth-watering results, and we are still on the journey, on the way to get there? And I think part of the challenges over time has been identified to be sometimes interference, lack of direct control on the operations of the system by the management. And that's one of the things that government has decided to cure with the PIA. Part of the expectation for us as a company is in going public, it exposes NMPC to the regulatory control of the marketplace. In that wise, it won't be decisions that NMPC is making as a voluntary choice. We want to improve governance, want to do things, focus on commerciality of investment and all of that. It won't be a choice we make because we want to do it. It will be something we will do because we have to do it. So the subjective decision of doing that because we choose to is taken away. So that control, we expect that it will help the system to operate at the level, at least eventually, of today's Saudi Aramco and other companies.
Fantastic. Essentially, it's a marathon to get to that point.
Correct.
In terms of governance, transparency, commercial operations. Okay, so I didn't want us to lose a very important point, and maybe some members of the audience can weight it. The sort of dialogue between yourself and InfraCredit. InfraCredit is helping to de-risk and unlock and enhance the credit worthiness of investment in projects in the gas space, right? You're not the actual investor, you're actually enhancing it. So the question then is, if we have an African energy bank that is going to end up funding the liquids, the oil that InfraCredit, who is the person that is going to help underwrite or enhance investment in oil and gas in Nigeria for the long run? And that's a question to throw out there. And maybe what we need is an InfraCredit for upstream oil in Nigeria. So that's just something to think about. But I want the final question on the panel to go to our two indigenous operators. Now, in the last sort of 2-3 years, we've seen a slew of reforms, presidential directives, directives to incentivize cost optimization, directives for gas, etc., deep water, PSC. We know all of this. Have these reforms gone far enough? And are there still one or two key asks you would have of our policymakers and regulators insofar as helping to unlock further opportunities to attract investment as indigenous operators? I'll start with Abimbola, then I'll go to New Cross. Thank you.
Thanks, Rolake. For me, I think when you have reforms, what you want to see is implementation. And so it's not so much as constantly having announcements of new reforms, it's actually seeing how they are implemented. So I won't be sitting here asking for additional reforms. What I would like to see is basically acceleration in terms of implementation and the practicality of implementing those reforms.
So which ones do you think have been slow on implementation? Can you be a bit more specific?
So I wouldn't say it's slow on implementation. So you can have incentives announced, but you all of these are the pathway, the process have to be documented and clear. And when you have delays in doing that, then basically you know it's there, but the path to actually unlocking those incentives, the path to all parties, and it's not just for the operators now, it's also for the financiers to fully understand that this is actually being implemented and this is the pathway to implementation. So it's not just one single incentive or reform, it's the clarity on the guidelines on how these reforms should be implemented and the transparency around it.
Okay, thank you. And coming to New Cross, so maybe let me rephrase it. No, which one of these reforms have been consequential to your business as New Cross Pan Ocean, particularly in the area of attracting funding?
Okay, yeah. So we know that the PIA has introduced a lot of reforms, right? And one of them is the fiscal terms, right? Which have made investment, somewhat in the upstream a bit more attractive, right? Now, the issue is stability, right? So, because the government constantly reviews, some of these provisions. Most times, they discover that, probably we didn't think this one through properly. And then through legislative intervention, like, for example, the PIA, for royalty, reconciliation, and the timing of the payment. So PIA says you should do that 2 months after. Now, you have a situation where the newly enacted Nigerian Tax Law Act is saying that should happen 14 days after. So, somewhat that has really now undermined, the initial provision in the PIA. So I think it's an area that the government and the regulator, need to look at, because we need to give investors confidence. And one of the things they look at is the transparency and also the rationale, stability of those, because companies plan based on some of these incentives, So now introducing that after, like, changing the rule, in the middle of the game. So that stability is going to be, and predictability at the same time. So because when you are investing, you have expectation based on some certain assumption. Fiscal assumptions are, crucial. So that is also an issue. So the other issue is that there needs to be some sort of clarity. So we found out that in some of the laws that we have, a lot of things are left to different interpretations. So, for instance, the host community development trust fund system of recent, based on our interaction, so we made to understand that certain costs that were not properly defined, right, either in the PIA or in the regulations issued thereafter. So we had this engagement actually, so that one way or the other, those items are being brought in to say, you need to factor them in. And if you do that, it's going to further increase, the cost. So regulation is a major factor in the upstream. So we need to make sure that, a lot of engagement and also deep thinking around some of the clauses before we pass them into law, not to, after passing them into law, you're now kind of trickling with them and all of that. So,
thank you.
yeah, that would be key. Thank you.
Thank you. Ladies and gentlemen, a round of applause for our panelists. I think they've tried. They've done justice to the conversation. So I want to come to the audience now, and I think in the interest of time, we will take questions in bulk. I will note them, and then we'll direct them to the panelists. Can you please keep your contribution to a maximum of 2 minutes or a minute and a half? I would like maybe to get the first 6 contributors. Please let us know who you are, what your affiliation is, and we'll take it from there. I see we'll come to the lady here and the representative of the Secretary General of the Federation, and then we'll go to, I think that's Professor Iledare there, and I see a hand here in the middle. So we have 4 already. We have 5. Anybody on this side? No? Okay, so let's take the first 5 questions, all contributions, starting with the lady. Thank you.
Good morning, ladies and gentlemen. My name is Pat Maseli. I represent, I'm a board of trustee member for OMEL 26 host community. We've talked about reforms, BIA implementation, but we're experiencing a lot of hiccups, frustration from the settlers. The guideline is quite straightforward, and we are being frustrated. We were inaugurated since 13th of August in 2024. Since then, we've not been funded. Not until 2 weeks ago, when some host community stakeholders carried out a series of agitations in the media, threatening to stop all operational activities. Even at that, for my community, the money that was released was short by over 2 billion naira. And we intend to do gas to power. If it shortchange us by 2 billion, how are we going to execute gas to power? Meanwhile, gas is being fled. All efforts and our requests for meetings to reconcile and amicably resolve the issue has not yielded any positive response from the settlers. It's up to you to know who is the operator of OML 26. They should intervene and compel the settler to address the short payments and other related issues, otherwise convene all parties to resolve the issues as soon as possible. Otherwise, this financing and production stuff is not going to work when we shut down all productions. Thank you.
Thank you very much, ma'am. Can we get the next question, please?
All right, please keep your questions straight, short, and to the point. Thank you.
Thank you very much, panelists and the moderator. I'm Professor Babatunde Bolaji Bernard, a nuclear and environmental scientist. I'm representing Secretary to Government of the Federation. I'm happy to have been the one the SGF asked to be part of this. Discussions have gone on almost forgetting that government itself, the Office of the Secretary of the Government of the Federation, is the government of the Federation. That's where government runs from. My senior brother, Dr. Farouk, I couldn't agree with you better. When I was mentioning green bond, Nigeria has invested quite green investment, the green bonds from the infra credit, and so on. But if you listen to the speech of the Secretary of the Government of the Federation, we are actually advocating homegrown solutions, and the President has made it copiously so in all his policies at the moment. There has been a long session in the history of this country where the integrity of purpose as a country has been completely disintegrated. The wide gap even between government and the citizens, the government and the public and the private sector the president is doing everything in terms of policy to work to reduce this gap. And I believe it's high time that Nigerians will also, for the originality of purpose, begin to think of how we can move our country to the next level. The reason we are still speaking green bond, green investment is this adage, which I believe all of us can relate with. Once upon a time, we were at a river where there are crocodiles. If you know how to swim through a river that there are crocodiles, you swim without noise. That was when we should have taken a decision on how we're going to cross the river or not. But we jump into the river and we're crossing the river. Until you cross a river full of crocodile, you cannot say meh to the crocodiles. I'm sure the others will get a grasp of what I'm trying to say. We are deep into the international community. Nigeria has signed a lot of treaties. So we cannot just jump out of it at the moment now. But we can use indigenous sense, what I always refer to as native sense, to also solve our problems. Still tapping. So we're acting locally, but we're impacting internationally. China did that in 78, and see where they are. Back to the issues that have come up here, which borders directly on policy somersault. It will interest you that for a long time, this is another thing that this government has done. There hasn't been a policy framework, no policy template. And policies were just being made for reasons as they arose. But I'm glad to tell you right now that at the office of the Secretary of the Government of the Federation, a policy framework, a policy template has been created. And we are not just stopping there. We are going to benchmark all existing policies to be able to see that they follow the framework which we have created. And that is going to resolve all issues of policy somersault in the country. So I want to plead with every Nigerian and all of you, the private sector as well. You need to play this game with government now. You need to come closer to government and help to shape the policies that will bring a better country to us all. Thank you.
Thank you, sir. I think Professor Iledare had a question.
All right.
Thank you very much. My name is Wumi Iledare. I'm Professor Emeritus in Petroleum Economics. And I remain very optimistic with the right governance signals. And that's going to be my question. What are the signals you still need from the government to be able to make financing the oil and gas industry within possible? Americans built America. Europeans built Europe. Optics matter a lot. What can we do? How can we enable the government to create the environment that is required so that money can flow? And by the way, my friend, the keynote speaker, professors are willing. Do you engage them? How can we begin to engage intellectuals within us? When we go to those meetings about energy transition, they come with their first 11. More often than not, we go with our second 11. And then they dribble us and dribble us, we signed. How then can we begin to engage intellectuals to get the government to get the right signal? I was on TV yesterday defending 15% tariff to enable stability in the downstream sector. This morning, I woke up, the government suspended the order. Thank you. You ridicule your intellectuals when they defend you. How can you begin, even you that are sitting there, how can you begin to use your intellectuals as the front? When we are writing the petroleum industry bill, when they come, we introduce ourselves, they just advise us, they don't dictate. signals from the government, pursue it. It's your right. Thank you.
Thank you very much, Professor Iledare. The final two that already raised up their hands, I'm being told we need to wrap up the Q&A. I'm a bit surprised, but let's have the two hands that I think were raised prior, and then we'll come to the panel.
Thank you very much. I'm Akintola Olatunde Franklin, retired from NNPC. The question, it has been noted in the course of all these presentations and all the people that have spoken that there have been some policy somersaults. And I'm happy, I penned down this question. I say clear government policy underpinned by a vision to make energy available to all is very, very important. It's very, very important. We have a national grid that is very, very, it's like we don't have any national grid. I mean, power grid. Like 5,000, is it 5,000 or 8,000 megawatts? We should be talking in terms of gigawatts, terawatts, that even give room for some redundancies. That is, after you have a high capacity national grid that gives room for some redundancies. To generate power is not so much the problem, but to transmit the power to the users and to make power available to all, because you are largely unproductive without power, without energy. The gas is there. There is a lot of infrastructure deficit. We don't have infrastructure in terms of for power, even for gas. We are trying to do something now, but government has to make it. I mean, there must be a vision from the government. I'm happy to hear that government is now looking into the policies and things like that, but we need to, government must have it in plan to have a high power grid, national grid. If that's what there, then to generate power, I mean, it doesn't take much. Many of our power plants now, they are not producing at, somebody told me that, is it Egbin power plant has never produced, probably not up to 40% of its installed capacity, because there is no grid to take the power. So we need to look at this, and then we take it from there. If that were there, then some policy somersaults will not be there. We know that all the cities should be on grid power. Lagos, all the major cities should be on grid power. In remote areas, you can be off grid. That, I mean, there is no problem there. But then, yeah. And
thank you.
Sir, okay. No problem.
Thank you. Thank you very much, sir. The final one in this round. Thank you.
Yeah, thank you. My name is Mascot Ogunjemiyo. I work for SLB. Yeah, my question is, can you comment on the perception that the Nigerian capital market is not deep enough to fund the upstream sector? If not, why is the industry still heavily dependent on the traditional bank for funding?
Okay, sorry, the last thing you said, why is the industry dependent on traditional
bank funding?
Okay, thank you very much. So we have both comments and questions, not all directly relevant to the discussion. So I think let's start with the capital markets. I'll bring in Jude to respond. And then the OML 26 question, I don't know if anybody wants to address the broad principle behind the question, not specifically the issues and the operator. So I don't know whether NNPC Limited may want to address that broadly. And then the issue of homegrown solutions, government signaling. I will let the operators maybe wade in on government signaling, and let Chido, you may want to talk a bit more about homegrown solutions and your personal perspective on involving Nigeria's intellectuals more in the discourse that can help drive some of these solutions. So Jude, perhaps I'll start with you.
All right. Thank you very much. So we have a market today that has a market cap, combined market cap of over $100 billion. The equity capital market itself It's about $64 billion, and the fixed income is $37 billion. So the market, to a large extent, is deep enough to be able to address the funding requirements. If you think about the value of trades we've done this year in the secondary markets, it's 3.4 billion US dollars. 20% of that is done by international. So, and we do have a more liquid FX market at this particular time, unlike before. So I think it's really more about ease of ease or old practice. So people go to where they are familiar with. But the market does present an opportunity for capital raise. And we have an MOU with different exchanges, London Stock Exchange in particular, Johannesburg Stock Exchange, and more recently, NASDAQ Dubai. And what that really does is to allow investors to be able to invest across those geographies. And Seplat has taken a good advantage of that. They are listed on the NGX and they're also listed on the London Stock Exchange. So the ability to access capital from our market is really there. It's just up to the issuers or the companies to talk to a financial advisor, and they'll be properly guided as to what they need, equity or fixed income, to meet their funding requirements.
Thank you very much. And there was a question around the host communities, OML 26, some of the issues there. NNPC Limited, Mr. Oluwani, do you have a perspective to share on these types of issues?
Okay. I think it's just natural that when you have to do with the oil and gas industry, fingers will immediately point at NNPC to provide the answer. And
it was a random, it was a totally random decision.
But I think the good thing is that that community fund is a product of the PIA. All right. And one of the great things about that document is that the operational modalities are well spelled out, okay? And in a situation where you have disputes or concerns, it is important to approach the relevant regulator to intervene and call to order any erring parties. Today, NNPC is a company and no longer in regulatory capacity. So we can only share a view on that. But I mean, what we would just advise the affected party to do is look at that enabling documents and take advantage of the provisions in there. Approach the relevant regulator to intervene in that situation. Thank you.
Thank you. And I guess underpinning some of these types of questions is the fact that some of these above ground issues create a perception of risk in the industry as a whole that may deter investment or affect calculations of key decision makers. So thank you for that perspective. Now, I'd leave this open between the operators, InfoCredit, the issue of homegrown solutions. The issue of even the capital markets issue, would a new cross or first MP, are you planning to go to the NGX at some point? I'd also like to hear your thoughts. If not, why not now or maybe in the future? And then maybe you can also speak to some of the questions around homegrown solutions involving other types of voices in the debate as to how to advance the sector. Chida, I'll start with you and I'll come to the operators.
I think I'll just touch on the homegrown solutions. Something is clear, that it's painstakingly difficult to build. It's easy to destroy. There are efforts by DFIs financed locally, internationally, that are being conceptualized. Some are operational today. I know about MDGIF. I know AFC is working on a solution with NUPRC to create an equity fund. I know about the Renewed Hope Fund. There are many solutions that are being put together to attract patient capital that is usually required to build out these projects. InfraCredit itself is a homegrown solution that was conceptualized by the Sovereign Wealth Fund. So it's easy to point your finger and say there are not enough solutions. It takes a while. It's a process for these solutions to materialize to the point where we can refer to what results they are yielding. Thank you.
Okay, thank you. Abimbola and Mr. Femi.
Okay, so I'll comment on, you asked a question about whether we will be...
Yeah, and also the question that Mr. Iledare asked really around government signaling.
Okay.
Yeah.
So, so in terms of our coming to the capital markets anytime soon, the only thing I would say is that there is no option that is off the table for us at this point. We are in a growth phase, and it is one of the options that we are considering, and we will look at it at the right time. In terms of government signaling, we think government signaling has actually been very positive. If we compare now to prior years. However, I think it has already been stated that there has to be stability and demonstrable impact. So we've seen a lot of very positive policies. The PI is here. We have the government incentives. All of those are very good signaling. And I mean, I remember when the PIA was passed, it was, we speak to financiers all the time, and that obviously was a very good signal. But it is all in the implementation, and it is all in the stability. So when government gives positive signals that it is actually interested in making Nigeria an attractive destination for investment, we shouldn't then have months after developments that could question the stability. For instance, I think it was 2 months ago where, I can't remember the exact time, where there were questions and it wasn't clear on the leadership of NNPC, for instance. That was a negative signal that could have toppled all of the good work that had been done in terms of signaling. So that.
Okay, thank you.
Okay. So, so regarding when New Cross Panocean is planning to come to the market, so our case is similar to their case in terms of timing. We're also trying to grow production, you know, just like what the gentleman said about the requirements of coming to the market, which is to ensure that we're able to incite the would-be investors, and then also the consistencies of the cash flow, because that is a major driver of what investors will be looking at. So it's part of the financial strategy. So, but the details are being worked out, and also the timing, right? So, in terms of the government signals, so I think I've alluded to that earlier in terms of stability of policy. Aside that, there's what is called soft infrastructure, which also defines the investment climate and is a major factor that influences investor confidence. So when issues around rule of law, you know, are critical, and also when you have laid down regulations, procedures, and when you put in a request, and when you start seeing some unexplainable delays, or you are reading different innuendos and all of that, you know, suggestive of possibly political interference and discriminatory treatment, you know, and those kind of posturings actually are a disincentive to the market. So government of the day needs to ensure that it watches its actions, and also to follow the rule of law. And if you define the process right? People expect that you keep to that process without wavering. So that consistency also is key. Thank you.
Thank you very much. I was told that we had one question, but I also wanted Dr. Farouk to perhaps maybe just make a few remarks on what he's heard from the discussion today when we come to round up the panel. So I'll come back to you, sir, after I take the final question from the floor. Please.
All right. Okay. Good afternoon, everyone. Excellent conversations. My question is kind of straightforward. In about 3 weeks.
Sorry, may we know you?
Abdulatif Amodu.
Yes.
I used to be the publicity secretary for this great association, NAPE. In about 3 weeks, it's been announced there's going to be a marginal field bid round.
Sorry, can you
Marginal field bid round. It's meant to commence on the 1st of December, 2025. About 4 years ago, we had a marginal field bid round. What are the lessons you would say, or the opportunities in the last one that were barriers to funding, that made funding difficult? What were those barriers? And from where you sit now, looking back, let's articulate those barriers and see how the current bid round can learn from that. The marginal field bid rounds or marginal fields are really small in the full ecosystem, but they're the grooming grounds for bigger companies. So Seplat, we have platform and the marginal field. Aradel started as a marginal field and now they're big sharks. It's important that marginal field bid rounds are taken seriously and they are well funded. So to the panel, where are those opportunities that you believe should be leveraged in this next bid round? Thank you very much.
Okay, thank you. I think that's a great question. Perhaps we can start with the operators. I'll hear from NNPC Limited as well. Your take and experiences that you can share, or what you know about those who have gone and bid for these marginal assets, experiences, funding obstacles, impediments, etc.
Okay, thank you. I think I'm not specifically directed at marginal field bid rounds, but bid rounds generally, because we have participated in some. I think the most important thing from both the operator's perspective and the financier's perspective is the clarity in the process and the transparency of the process. And once you have a clear process and it shows that basically the, in quotes, due process has been followed, that gives everybody the confidence to actually participate in subsequent bid rounds. And then this is not really for the regulator now. This is more for, I would say, the operating community. What we observed in, I think the last one we participated in, was the valuations were astronomical. And you ask yourself, how are you going to finance this when you've actually overvalued these assets? So do not, in the bid for competition, overvalue assets that will then lie fallow, because you will not be able to secure financing for those assets. That's all.
Great point. I don't know if New Cross has any contributions to this.
I think she has said it all. So, but I think in addition to what she has said is the issue we've been discussing, which is the availability of, homegrown funding, and that being patient capital. So, because most times people don't have access to, such kind of capital that is patient enough. So most times people rely on debt, and debt is not any form of patient capital. So because some of these assets, they have a very long gestation period. So, and then that speaks to bankability that you spoke about. So by the time you have overvalued asset, and then by the time it's stress tested, and then they see that, this is risky, and then they just, put their funding support, and without any deal can fall apart. Yeah. So I think being sincere with the entire process, and also ensure that we build homegrown capital base, and then also the issue of, sharing risk. So most times, companies want to go in all by themselves. Again, you need to look at your ability to fund, and then also most times too, there's no credible funding plan. So you can have an asset, all the activities without a credible funding plan, then it's going to fail. Thank you.
Thank you. I like NNPC to come in here, but before you come in, I wanted to put a perspective on this. So I run an advisory firm, and this is part of the work we do. We're still getting the hangover of the last bid rounds and other asset acquisitions where people are having to relinquish either because they don't have the funding, the process was not clear, investors that are coming in internationally are not even sure what happens, the valuations. Is there a place for the regulators to actually look at the sector as a whole? So each time we come to a bid round, there is a strategic and more national plan around the funding structure for all these assets. Not that you help companies find the funding, but each time you're putting a bid round here, you have an assessment of how much you plan to raise as a country through that bid round. And you're looking at the whole spectrum of domestic pools of capital available, and you're putting some sort of structure in place to help support the process end to end that would then make it easier for each of these bidders to have a reasonable prospect of accessing funding, having ticked all the boxes. I know it's a big question, but I'd like to even hear any thoughts you have around this.
So I'm sure this will be one of the takeaways from this engagement. It will be very, very useful to have representatives of relevant supervisory agencies to speak to some of these processes from the dimension of being in the seat. Okay, so we can only make assumptions at this point, but maybe for future consideration, we'll look at that. So my understanding of that question is that it's coming from a perspective of bidding rounds take place, rounds and acreages are won, and then over the years, for many of them, nothing happens. So how do we work to reverse that trend? That's my understanding of the focus of the question. And I think it's similar to what we had with refineries. Many people got licenses and nothing was done with them. I think it speaks to some things that we do. I think there is this song that says that now that we have found love, what are we going to do with it? So the question is, why were you looking for it in the first place when you didn't know what to do with it? I believe that many parties get involved in this because maybe they have what it takes to just meet the bidding requirements. Not sure they will win, and then all of a sudden they win, and then it's like, so we have this license, what next? What next should not be a question you are asking at that point. You should actually have that already factored in before you go for the bid. If there's a way to weed out speculative bids by the regulator, that should help that process so that you have serious and deliberate people or parties participating in those rounds, and they are ready to take it to the next stage. I think that's very important.
Thank you. Great contributions all around. Dr. Farouk, please. Just some final comments and thoughts based on what you've heard, because we've also responded to some of your keynote remarks. Are you reassured, comforted, excited, nervous?
Where do I begin? When I stood there, I was fairly critical of our country. Now let me say that seriously, the oil and gas industry, Nigeria is a pace setter in Africa. No doubt about it. I've gone around the African continent, and I can say this authoritatively. Maybe compared to Algeria, that's a country that we can say that, yeah. And I have asked myself severally, how did Algeria make it? And my only conclusion is that from day one, they never sat down to rely on funding from outside of Algeria. Maybe they didn't have a choice, no doubt about it, given the way they got their independence and the relationship between them and their former colonies, etc. I mean, colonial masters, etc. When we went to Algeria, and I see that virtually everything from Sonangol to 99% is their own funding. In Nigeria, it's not the same. EMP, you've made great progress, but you're still looking outside for funding. It's good. I mean, there are various models to get there. I think this is one. We are industrious, no doubt about it. But I believe that the imperative of a new paradigm shift in the way we run our industry is very important. It's not going to be comfortable because this is the way that we have been brought up to see the industry. But I honestly believe that this is very important. Second, I have seen in the last 4 years, 5 years, a number of our private oil and gas companies going outside Nigeria to other African countries to operate. I think it's a very good thing. We are doing that more than any other continent. I mean, Egypt is now trying to do the same thing. Algeria in the last few years is also kind of, but Nigeria is really making a hit. The challenge is that we are going out to these countries the way IOCs have come to us. It won't work. We went to a conference, and a Nigerian, how can you help us to penetrate this country? I said, are you ready to cede some of your hold on this company to the people of this country so that they will say that we are part of it? If you want to just come and establish an office and hire some people to run, you won't get it. And I give example with Shell, with Chevron, with BP, with Eni, with Total. Total is said to be a French company. Go and look at their list of shareholders. France doesn't have 50%. Go to Shell, go to Chevron, etc. So if we are able to do this, I think Nigeria's role on the oil and gas industry on the African continent will be greater, and we will be able to have, we will also be able to grow the industry more than we have done now. For now, I want to say that we have the leadership, especially from the private sector. Really, you guys have made us proud. Keep doing that, and together we'll make Nigeria even better. Thank you.
Thank you very much, Dr. Farouk. And thank you to my panelists, Mr. Oluwani of NNPC, Mr. Akinyemi of New Cross, Abimbola Ayinde of First CNP, Mr. Jude Chiemeka of the NGX, and Mr. Chido Oyilimba of InfraCredit. A round of applause. I hope you enjoyed the conversation. Thank you.
Distinguished guests, ladies and gentlemen, please appreciate our panelists. Panelists, thank you very much for sharing your thoughts and for giving us some insights into the conversation. Allow me to beg your indulgence. Please rise and bunch up for a group photograph. So we'll have two group photographs, one without the plaques and the second with the plaques. I would like to invite our host, the president of NAPE, John Bosco Uche F. NAPE, to join our panelists on stage so that the presentation of plaques can happen speedily. Thank you very much once again, our panelists, for adding your voices to the conversation. Thank you for sharing from your wealth of personal and professional experience.
We'll also ask our keynote speakers. We'll also ask our keynote speakers to join the panelists on stage for the presentation of plaques. And let's also have a representative from the Energy Institute. So we are going to have a representative from the Energy Institute join the group photograph. Thank you. The middle will be best, or at least between the gentlemen. One on either side of the president, yes. All right. This group photograph is a classic example of diversity and inclusion. The list keeps expanding. Any other takers? All right, let's have the plaques ready, please. Thank you. Plaque for the SGF, His Excellency Senator Jordan Akuma. Please don't be in a hurry to leave, sir. Yes. We have plaques for you, sirs. Please don't leave yet. All our panelists, please remain on the stage. We have plaques for you. Dr. Ibrahim, sir, we have a plaque for you, sir. Thank you. All the panelists, please, we have plaques for you. Please don't be in a hurry to leave the stage. All the panelists, we have plaques for you. Yes, yes. Panelists and moderator, please remain on the stage. Let's have that presentation done right away. Thank you very much. For the SG of Apple, Dr. Ibrahim. Remember, we still have a group photograph with the plaque, so as you receive your plaque, please do not leave. NNPCL, please. Adedakwa Shegun. Go. Mr. Oluwafemi Akinyemi, please get ready. Please be on standby. Mr. Oluwafemi Akinyemi, please receive your plaque. Thank you. Please do not forget to have a group photograph after all the plaques have been presented by the president. Thank you. Mr. Chido Onyilemba, please be on standby. Abimbola Inde, GM First ENP, please be on standby. Jude Chiemeka, please be on standby, sir. And last but definitely not the least, Madam Moderator Rolake Akinkunge Filani. Please be on standby, Madam Moderator. All right, the final plaque, after which we'll have the group photograph. Thank you very much, all our panelists. Thank you. We're almost at the finish line. All right, all our panelists, please proceed to the center of the stage for that final group photograph. Thank you very much. Panelists, please
make your way to the center of the stage with your plaques so we can have the final group photograph. Thank you. All right, paparazzi, that is your cue. Let's have that final group photograph. And yes, it has been a very robust discussion. The theme, financing the future of Nigeria's energy sector, navigating energy transition and driving sustainable development. And yes, we've listened to our panelists, add their voices to the conversation. And yes, it has been a very, very mentally stimulating discussion. Once again, thank you very much, our panelists. Thank you very much. You may go back to your seats. Thank you. Thank you, our host, the president of NAPE, John Bosco Uche F. NAPE. Thank you. All right, ladies and gentlemen, it has been a very, very exciting time as we've walked through the proceedings of the executive session for day 5 of the NAPE conference. Thank you for your time, thank you for your patience, and most importantly, thank you for your presence. Please make welcome to give the vote of thanks, the president-elect of NAPE, Mrs. Olajumoke Ajayi. Round of applause for her as she takes the stage to give the vote of thanks.
Thank you very much, MC. Good afternoon, everyone. And I believe you all agree with me that it has been a great session with the insightful keynote addresses and the engaging panel discussions. I want us to give a round of applause to our keynote speakers and the panelists. And I'm sure that we are all going with valuable takeaways after this executive session. So again, I want to say thank you to our keynote speaker and our panelists for honoring our invitation, and to all our elders in NAPE, our BOT members, our AC members, and all the fellows of NAPE for staying with us up to this time and making this session a very interesting one. Thank you, everyone, and we look forward to seeing you in the evening during the awards night. God bless you all. Please note that we have lunch after this meeting, so stay back to have lunch. And Energy Institute Conference starts today, and it ends tomorrow. So from today till tomorrow. So Energy Institute, please stay back for Energy Institute's conference. Thank you very much, everyone. And we see you this evening, and we hope to see you also at our next year conference. God bless you all.